Hey traders, this is Ron Hayden, Market Tamer. Happy Tuesday. Hope you guys are having a great day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be your financial advisor. Kick off here with the spiders up 0.75%. We pretty much held the 20-day EMA in red yesterday, which is why I said the bulls are still getting an edge, but there's some yellow flags out there. Today we popped higher by $2. Back right on the 5-day, just barely above it. Bulls still get the edge. And the diamonds, which is underperforming a little bit to the spiders, it popped up just over 0.5% today. It's barely below its 20-day EMA right now. So again, bulls still get the edge heading into this week. I had a question on the golden cross and what it means. And if I go back to the spiders specifically, using the SPY, the 50-day is in orange, the 200-day is in purple. With the 50-day coming up through the 200-day, it triggers a technical signal. A technical buy signal is what I'm trying to say. And, do I place any weight in that? Not really. I would say in the past, years ago, it got a lot more, attention. You'll still hear some people talk about it, but if you look back to the cross on 12/11, we're all the way down here. Yeah, it preceded a quick drop, but then we were right back up there, literally in the same amount of time. And now that we're getting across, is that more bullish? Personally, I would ignore it if it were me. That's what I basically do. Yes, I'm aware of it, but it really gets no attention for me. Now, let's take a look at Qualcomm and Apple. Apple's down 1% today on reported news that a trade judge has ruled in favor of Qualcomm and against Apple on an import ban, that there was patent infringement. So for the stock to be down 1%, it really isn't that worried, apparently. My guess is appeals are coming out the wazoo. There'll be lots of them, so we'll have to see what happens. Technically, Apple, after breaking out on the 21st, it's now back getting close to its 20-day EMA in red. If it gets below there, down towards the 50-day would be a probability target using technical analysis. There's also an unfilled gap around 173. But I'll tell you what, another 2 or 3 days, that orange line is going to be at the gap anyway. So I'd say 173-ish is the downside target. So if Apple down, was Qualcomm up? Try that again. It was only up 2%. So Qualcomm wasn't really off and running either. I think they both companies, or it seems traders know there's probably appeals. But here's the thing on Qualcomm, purely technical. Look at the 200-day in purple. It stopped us cold over here, and it was actually a gap point for earnings here. So there is some correlation, plus there was a low here. So if I zoom in, we get above the 200-day. It also takes out the previous high, gap fill to 62.50, then 65, then all the way up here. So I want to keep an eye on volume and see if Qualcomm can actually get above the $60 target. Now, if you have not registered, you've got to see this. Trust me on this. I only need 5 minutes of your time on Wednesday. I know I've said it in last night's video too, but I will show you the hottest stocks for the weeks ahead. Specifically, the top 10 stocks for April. We can do the top 10 stocks between now and the end of May, Memorial Day, before the summer even begins. These stocks rise as much as 75, 85, 90+% of the time. A lot of the stocks see just on your screen. They sort of go nowhere, then they start exploding higher. I'll show you how to spot them. It's really, really easy. And plus, you're going to leave this webinar with a list of hot stocks, your own list, for free. Just give me 5 minutes. I'll show it to you right at the beginning of the webinar. So go ahead and register ASAP. There was less than 90 seats available for each. Started with 500, so they're going super fast. At the bottom of this video, you'll be able to register on YouTube or in an email. So if you're watching it via email, click those links, register ASAP. It will not be recorded and sent out. You have to be there live. All right? So look forward to seeing you there. Now, a couple other stocks. KHC is one that I get a lot of questions on. This is Kraft Heinz. They've been in a world of hurt. So is Buffett since the stock gap down back in February. There's this ever so slight rounding bottom starting to form, but boy, it isn't much. The volume is super unimpressive. It doesn't strike me as major accumulation yet, but here's what I would say. Purely from a educational perspective, as always, if it gets above the red line, that is a 20-day period. We get above there, where we gap down around 36, then frankly, the gap fills the target. Just technical, I'm just saying. So if you want to ask me what is the first sign of life in Kraft Heinz, a nice pickup in volume, but more so, getting above that red line. Biogen IDEC, BIIB. Stock had a nice move today, up 5+%. I want to zoom in. I get asked a lot, how do you know when a stock is trending lower and what a reversal or the signs of a reversal look like? Well, big down day, big volume, even bigger the day before. But look at yesterday, sort of an inside day doji. That's a sign there could be a turn. Then you get a gap up and close at the highs on even bigger volume, and you've closed above the open price. This is sort of like a U bottom. This is what bottoms look like. So, for educational purposes, if I had a long put going into this report and it went down, the stock had gapped down, and now I see this pattern, this is where I would take that put from 320 and maybe roll it all the way down to at the money and start to cash out some of that capital, some of that value in that long put. I wouldn't want to jettison the long put completely per se, because stock is still below all its moving averages. All it's done so far is get inside its 2 standard deviation John Bollinger Band, which is in green. So it's relieved the oversold condition. But this type of U bottom with a pickup in volume, those are your warning signs that if you're a bear, better be careful. Here is SYNA, also another stock that is putting in a U, kept coming down, hammer. Now I wish there would have been bigger volume, but look what happened today. Gap up, close at the highs of the day, and back above the 5-day. Target is the gap down point around 38.50, about 10% higher than it would be a gap fill. So again, if I was bearish on Synaptics, I got to take note today. Yesterday was a warning with a hammer. Today's big move, you're on notice, bears. All right, how about Carnival Cruise, another stock that's moving down? Earnings related, they gap below the previous low. This gap fill here, or this gap's definitely been filled. Now there's another little gap down here. Oh, we hit that too. So where's the next target? All the way down at the December lows. This one rolled out of bed pretty good too. So that is it. I'll bring back up the slide. Remember, register for this webinar. There's less than 90 seats left. I look forward to seeing you there. You will leave with the highest probability trade ideas for the weeks ahead, not based on opinion, based on facts, the stock's own historical track record. I'll see you there. Have a great day.